iRobot Bankruptcy Explained. What happened to the Roomba maker? iRobot, the company behind Roomba robot vacuums, has filed for Chapter 11 bankruptcy. Once a pioneer in home robotics, iRobot is now restructuring after years of financial losses. Founded in 1990, iRobot became famous for its Roomba robotic vacuum. For years, it dominated the consumer robotics market and sold millions of units worldwide. In 2025, iRobot's financial situation deteriorated rapidly. In the third quarter of 2025, revenue fell to about $146 million, down roughly 25% year-over-year. This decline was not isolated to one region. U.S. sales dropped by more than 30%, while international markets also saw double-digit declines. The company reported operating losses of nearly $18 million in that quarter alone. By late 2025, iRobot had less than $25 million in cash available. Just 1 year earlier, iRobot held over $100 million in cash. That rapid cash burn raised serious concerns about its ability to continue operating. Even as sales declined, iRobot's costs remained high. Gross margins fell to around 31%, down from prior years. Lower pricing and higher expenses left the company with less room to absorb losses. Low-cost competitors entered the robot vacuum market. Prices dropped, margins shrank, and iRobot struggled to compete profitably. In 2024, Amazon planned to acquire iRobot for $1.7 billion. The deal was abandoned due to regulatory concerns in Europe. At the same time, tariffs on imports from Vietnam increased costs. These tariffs added tens of millions of dollars in expenses for iRobot. Combined with higher logistics and manufacturing costs, profitability became increasingly difficult. Earlier in 2025, iRobot warned investors there was substantial doubt about its ability to continue operating. That warning signaled serious financial distress. Public companies rarely issue these warnings unless bankruptcy is a real possibility. In December 2025, iRobot filed for Chapter 11 bankruptcy protection. This allows the company to restructure instead of shutting down completely. The filing was pre-packaged, meaning major creditors had already agreed to the restructuring plan. Under the restructuring plan, iRobot will be acquired by its main manufacturing partner. The company will become private and be removed from the stock market. Existing shareholders are expected to receive no equity in the reorganized company. For many investors, this means a total loss. Common stock is typically wiped out in Chapter 11, restructurings when liabilities exceed assets. iRobot's collapse shows that brand recognition alone is not enough. Competition, costs, and failed deals can destroy even well-known companies. Despite hundreds of millions in annual revenue, iRobot could not maintain profitability. The company's future now depends on new ownership and restructuring. This is the real business today. If you want short, data-driven explanations of how companies really succeed or fail, subscribe.